Hey all, welcome to ShareTrack. This is Raj here. In my video yesterday, I made the case for CRISPR therapeutics and many of you provided your valuable feedback and I'm richer for that. Thank you. Today I want to make a case for Bluebird Bio and I hope you'll also give me your feedback again in the comment section. It was fantastic today. I hope it's the same tomorrow. Let's get started. Welcome back, friends. When we talk about Bluebird Bio, the key points are cash runway, Zynteglo sales, SKYSONA sales, and lower cell PDUFA for sickle cell and TDT. So that's what we are looking for. And at the end of Q1, Bluebird had said that they had cash balance. So we are tackling the cash balance first. So at the end of Q1, Bluebird had said they had a cash balance of $364 million. And then they predicted a full year cash burn of around 270 to 300 million. Fast forward, 270 to 300 million is basically a 10% variance. That's a little high. But again, we are talking about huge numbers and operation that is still in the learning process. So I would say that we keep this 270 to 300 in our focus, so that if Bluebird did change these numbers, that will give us an idea of whether the situation is improving or getting worse. So if we were to look at the Q2 for the same cash position, they reported a cash position of $291 million and reiterated an annual spend of 270 to 300 million. They anticipate the cash runway to last to the fourth quarter of 2024 because 45 million of their total cash resources is restricted cash and cannot be available. So that's the cash flow situation, and they have still maintained their 200 to 300 million projection for the year. So I'm comfortable with that. In their Form 10Q, they have said, and I quote, "There's a substantial doubt regarding our ability to continue as a going concern. We'll need to raise additional funding, which may not be available at all, or may be available at unfavorable terms, and failure to obtain the necessary capital when needed may force us to delay, limit, or terminate our commercial programs, product development efforts, or other operations." So it's a very dire statement. This probably weighs on a lot of investors who are looking at the risk factors. That could also account for a little bit of weakness on Bluebird share price. This means there will be equity dilution. That's the way I look at it. And I do not see a reason why Bluebird Bio will not get money, because they have got 2 approved gene therapies. Gene therapies are the medicines of the future. And there's a third one, which actually is 2 in 1, because one of it is for lower cell is for sickle cell disease, and the second lower cell is for TDT. And again, I think they will definitely get money. And to me, it means that there's going to be equity dilution. So we have to keep that in mind when we invest in Bluebird Bio. This means any hike in share price due to lower cell approval or increasing number of Zynteglo and SKYSONA sales performance will have to be tempered down by the amount of equity dilution. So the way I look at it is that if revenue from Zynteglo, SKYSONA, and lower cell was good, equity dilution will be less. However, in Q1 2023 itself, Bluebird had said that they will not provide estimate of sales volume for Zynteglo and SKYSONA. So we must assume that the first year will be a base for Bluebird for them to learn, and using that base of revenue for SKYSONA and Zynteglo, they will start projecting in the next year onwards. And by the same logic, we'll not get projections for lower cell sales until Q2 of 2025, assuming timely approval by FDA. So we got to keep that in our mind. And at this point of time, let us look at the sales. Okay, so this brings us to sales numbers declared at the latest Q2 earnings release. So 11 patient starts were reported for Zynteglo in Q2. 5 cell collections were reported for SKYSONA, and they said we can expect 5 more cell collections before the year ends. And they also mentioned that there were 0 rejections by commercial or government payees so far. And all this is good news. They are on track to have 40 to 50 QTCs, that is qualified treatment centers, by the end of this year. And so they are ramping up their efforts as well. And we know that the PDUFA date is December 2023 for Lovo-cel for SCD, and Q1 2024 for Lovo-cel for TDT. That said, when we compare Exa-cel and Lovo-cel for sickle cell disease, both are once and done therapies. Exa-cel does proxy by promoting fetal hemoglobin, whereas Lovo-cel corrects the gene. In my opinion, Lovo-cel is a better therapy because it makes the gene modification to produce anti-sickling hemoglobin. This is also reflected in the higher price point of $2.4 million for viability as per ICER for Lovo-cel, as compared to $2.05 million for Exa-cel. And the good news we got yesterday for Bluebird was that FDA has informed Bluebird that there will be no AdCom for Lovo-cel. So let me explain. The US Food and Drug Administration does not schedule an advisory committee meeting or AdCom for all therapies in clinical trials. AdCom meetings are typically convened by the FDA to review specific issues, questions, or concerns related to certain drugs, biologics, or medical devices that are under review for approval or other regulatory actions. Advisory committee meetings are usually held when FDA believes that expert input is necessary to make informed decisions about the safety and effectiveness of a particular product. These committees are made up of external experts in relevant fields such as medical practitioners, researchers, and the patient advocates. The committees provide recommendations to the FDA based on their expertise and evaluation of the available data, and FDA may or may not accept those recommendations. The decision to convene an advisory committee meeting depends on several factors, including the complexity of the product under review, potential safety concerns, available clinical trial data, and other relevant issues. Not all products in clinical trials will require an advisory committee meeting, and the decision is made on a case-by-case basis. In my opinion, this reduces any risk for FDA not approving the therapy or on the particular due date. And let me explain why. Because when you have FDA reviewing therapies, especially under priority vouchers and fast track, there is already a collaboration between the FDA team and the company. And the FDA team is very closely, intimately knowledgeable about the product. And also the client team, like Bluebird team, is also much more familiar with the investigators at FDA. And they are on the same page. That's the best way of saying it. But when it comes to AdCom, you do not know who are the external experts who are going to come in, the dynamics of them working together. So anything could happen in an AdCom. And then there is situations where FDA has overruled AdCom and taken its own decision. So there is a lot of uncertainty as soon as AdCom comes in. The fact that they are not asking for AdCom indicates that the FDA team is comfortable with all the data they have from Bluebird and the proceedings the way they are right now, that they decided they don't need an AdCom. So in my opinion, this is a good positive for Bluebird. And that makes it, again, a little bit less risky, and less risky means better value. So that's how I would look at this. And so all said and done, what do I think about Bluebird? I think that Bluebird, the only concern we should have is equity dilution. And that said, the overall market conditions also have an impact on Bluebird. Because it's still a higher risk stock, despite the fact that Zynteglo and Bluebird are being commercialized and they have started earning revenue. They have not taken off. They are like a huge cargo plane which is picking up speed on the runway. And once it takes off, then it's got a power of its own. Until that time, I think we are still going to be a bit delicate. But in my opinion, it's the overall market conditions and the interest rate regime that is causing a bit of trepidation for the investors. In my opinion, Bluebird may stay range bound between $3.01 at the lower end and $4.14 on the higher end until we have some news about Lovo-cel in the last quarter of this year. So there are, this opens up to us to a bunch of strategies. The first strategy would be swing trading, buying closer to $3 and selling closer to $4. The second strategy could be dollar cost averaging whenever it goes close to $3. And the third would be selling covered calls when closer to $4. And and if the price comes back to close to $3 and you have a covered call which is positive, it's time to sell and realize the profits so that you can sell another covered call when it goes to closer to $4. So these are the things that I can think of. Of course, as always, my friends, these are my personal opinions and not financial advice. So I would request you that please do your own due diligence before making any trading or investment decisions. And now it is your turn to let me know through your comments about your own assessment about Bluebird Bio. I'm looking forward to that. With that, I would like to end this video. That's all from me for today. Bye for now.